Hello dear students, in this video we are going to learn a continuation part of conversion of partnership firm into limited company, and we'll recall the previous class theory and some basic concepts. In the previous session we have discussed the steps involved in accounting for sale or conversion of a firm into a limited company. There are 4 major steps involved here. The first step is calculation of purchase consideration. Okay, in the last session we have discussed how to calculate the purchase consideration. There are 3 methods to calculate the purchase consideration, that is lump sum method, net asset method and net payment method. And we have also solved the problem related to net asset method and net payment method. And the second step is ascertaining the form of discharge of purchase consideration. We have also calculate how to discharge the purchase consideration. And the third step is closing the books of vendor firm by passing journal entries or by preparing ledger account. After calculating purchase consideration and discharging the purchase consideration, the third major step is to prepare the ledger accounts and pass the necessary journal entries. So in this video we are going to learn the different entries which are needed to be passed in the books of vendor firm. First entry will be when the assets are transferred at book values including cash. As you know that we are getting converted from partnership firm to limited company. So when we are getting conversion, of course all our assets will be taken over by that limited company. When they are taking over all the assets, then the entry will be realization account debit to concerned asset account. Concerned asset account is nothing but which are the assets they are taking over. Like if they are taking a machinery, okay, realization account debit to machinery account. If they are taking a furniture, to furniture account. Okay, like this we need to mention in the first entry, that is assets are taken over. During the conversion, the limited company not only take over the assets but also they take over some of the liabilities. When they are taking the liabilities opposite to that, like concerned liabilities account debit to realization account. Concerned liabilities mean certain liabilities which are taking out like creditors and all will be mentioning here. The next entry will be when purchase consideration is due. We usually calculate the purchase consideration before we are getting into a journal entry. Okay, either by net payment method or by net asset method. How much the purchase consideration is, we need to mention here. So when we mentioning that purchase consideration due amount, the entry will be purchasing company account debit to realization account. Okay, purchasing company account debit to realization account. After purchase consideration is due, the next entry, how we are giving that purchase consideration, how they are receiving this purchase consideration amount. Okay, while they are conversion from partnership firm to a limited company. Okay, then the entry will be in which form we are giving. Basis on that form we have to distribute. Like if you are giving in a cash or bank account debit to purchasing company account. If you are giving in a shares account debit to purchasing company account, or if you're giving in all the different 3 forms, then you have to mention all cash or bank account debit, shares account debit, debenture account debit to purchasing company account. And during the conversion, if any realization expenses are paid, if it incurs any expenses, then the journal entry will be realization account debit to cash or bank account. In which form we are paying that expenses, we need to mention it. Got it? That is realization account debit to cash or bank account credit. And the next entry will be when the assets are not taken over by the purchase company and when those assets are sold to some other people. Okay, then the entry will be cash or bank account debit. Means when we are selling the assets, we are getting the cash, right? So cash or bank account debit to realization account. Got the point? In case of liability, if purchasing company not takes over the liability and paying off immediately there, then the entry will be realization account debit to cash or bank account credit. And the next entry will be You think in the beginning that some of the assets are transferred or taken over by the purchasing company, and some of the assets we sold to some other. And if some of the assets are taken over by the partners, okay, your business partners take over some of the assets over there, then the entry will be partners capital account debit to realization account credit. Okay, if your partners take over the assets which are there in the partnership firm, then the partners capital account debit to realization account credit. And in case of liabilities, opposite to that, like realization account debit to partners capital account. If the liabilities are taken over by the partners, this entry will be passed, that is realization account debit to partners capital account. And the next entry will be, we will be closing the realization account. Okay, simultaneously along with the journal entry, we will be preparing the realization account ledger account. Okay, that I will show in the next video session how to prepare it. Okay, so while we preparing, we will get a profit or either a loss. Okay, when we get a profit, in case of profit, we will transfer to the partners capital account. Then the entry will be realization account debit to partners capital account. Okay, in case of loss also opposite to that, that is partners capital account to realization account. Okay, here the partners capital, we might have a different partners based on the ratios what they have given in the problem. We will distribute that either profit or loss. Got the point? In case of any reserves or reserve fund are there, and if those reserves are transferred to the partners, then the entry will be reserves account debit to partners capital account. And the next entry will be when there is some undistributed profit and loss account. Okay, if some of the profit and loss will be accumulated, and those profit and loss belongs to the old partners, that is who are in partnership firm. Okay, for them we need to transfer it to them, right? In case of profit, we will transfer, the entry will be profit and loss account debit to partners capital account. If in case of loss, it's opposite, partners capital account debtor to profit and loss account credit. And the next journal entry will be when any partner's loan is paid, then we'll pass the entry like partner's loan account debit to bank account. If any partner's loan is paid, then this entry will be passed, that is partner's loan account debit to cash or bank account credit. And the next entry will be if any shares or debentures are distributed to the partners, then the entry will be partners capital account debit to shares in purchasing company account to debentures in purchasing company account credit. Okay, so if any distribution of shares and debentures happen, this entry we need to pass it there. What is that entry? Partners capital account debit to shares in purchasing company account credit and to debentures in purchasing company account credit. And the last entry will be when the final payments are made to partners. Okay, so after doing all this, we should make a final payment to the partners, then we'll pass this entry, that is partners capital account debit to cash or bank account. Got the point? Yes, go through with all the journal entries which are required for closing the books of vendor firm. Okay, revise the journal entry which helps us to create a ledger accounts. When you remember these journal entries, when you get to know that these journal entries, it is very easy to prepare the ledger accounts. Okay, so please revise it, what and all we have discussed today, that is what will be the entry when the assets are transferred, when the liabilities are transferred, when purchase consideration is due, purchase consideration is received, realization expenses paid. All these journal entries please revise and go through twice. Make it a practice in this session, and the next session you will know how to pass the journal entry by doing the problem, and simultaneously how to create the ledger accounts. Okay, thank you, take care, bye, stay home, stay safe, happy learning.